Hey everybody, welcome back to the Economic Analyst channel. In this video, right quick, I'm going to go over what's been going on with the money supply and how it relates to prices, in particular, in this case, is precious metals. And the case that I'm going to make here is that precious metals, and especially gold, has nowhere to go but up from here. The first chart I want to show you here is, in blue here, is M1 as a measure of the money supply created by the economist here in the US. And the way that they typically calculate M1 is basically checking account demand deposits plus currency in circulation, and then other checkable deposits. Now, unfortunately, they have discontinued the elements of M1 and they've changed the formulation starting in 2020 to include savings deposits. And for the purposes of this video, that's not going to do. That formulation of M1 is not going to suffice for my own analysis that I'm about to show you. So what I have done is created another calculation, which is demand deposits plus currency in circulation, and then increased it by 20% from the base, and shows how that has historically approximated M1 since M1's been formulated here. And that'll give us a close approximation as to what M1 would be had the formulation not been altered by the economist at the Bureau of Economic Analysis. Now, I've made a few videos on how to properly value gold, and one of the things that I brought in was a way to calculate what I call the floor price for gold here. And that's essentially what this one is. It is this formulation right here of M1. And what I noticed is that gold never ever falls below 20% of M1. So when you take M1 and measure it in billions of dollars, and then take 20% of that measurement aggregate account, it never falls below the price per ounce of gold never falls below that formulation of M1. So when we overlay that on a graph of time, where gold shows, gold is shown here in gold. Obviously, I made it that color on purpose. In gold's price, and red is the measurement of M1 at 20% of its money supply. You can see how that gold's price will never ever fall below that line, and so it can be served as a base floor line. Well, look what the Federal Reserve has done to M1 with their recent expansionary monetary policies. They've increased it to such a high amount, and gold's price has not increased to compensate for that it's literally going to force up that gold price in the coming months. So as this price starts to increase and push up that gold price, we're going to see gold enter a new bull market, very similar to what we saw in the 2000s. So it's going to be one where we're probably going to see gold multiply by a multiple of its earnings during this bout, although I don't know if it will last 10 years. But even if this bull market, say, lasts 4 or 5 years, if we take it from gold's floor right here in 2001 and track it up to what gold went up to in 2005, say, 4 years, gold doubled in price between that time. So gold right now is trading at about $1,800 an ounce. Well, if gold doubles that price, it's going to turn into $3,600 an ounce. And M1 right now, the way that the M1 money supply base is showing is that gold's minimum price is actually going to be about $1,650. So in other words, gold really should never ever fall below $1,650 an ounce ever again, unless if there is actually a contraction in the money supply, which is extremely rare. And usually when such occurrences happen, they are very brief and they are very short. They are not, unless if we go into a huge deflationary phase, which I highly doubt it given the Fed's generous monetary policies and the way that it has been behaving for the last decade and a half. It's highly unlikely we're going to see a drop in the money supply, and so gold's price will literally be forced up. Gold is severely undervalued. I have been saying this for months. It's shocked me that gold's bull market hasn't begun yet, but I think the low interest rates are actually working against it because they're keeping stocks artificially valued high. This is a gold forecasting model that I have, very similar to what I have here on Fred. It's just I charted it out. I want you right quick to ignore this ceiling price, which is highlighted in green here, and I'm going to uncheck this. And the blue here is again the same the same floor price calculation as I'm using in red on this chart here at Fred, and that is the floor price calculation of gold. And basically what I've done is just sort of charted it out based off the trending increase in that money supply that we have been seeing post-COVID. And right now, it's showing that over the next 3 to 4 years, by the end of 2025, at a minimum, at a very, very, very minimum, gold's price should be trading at about $2,200 an ounce. So if gold ever reached this floor here in 2025, it really shouldn't trade below $2,200 an ounce. And that's just based off the trend of what we're seeing here in the money supply for M1 that has been going on ever since post-COVID. So it's just basically a 2% increase in the money supply of M1 per quarter. And that's probably a very conservative estimate. That probably will grow a little bit faster. But just by that, we're probably going to never see gold fall below $2,200 an ounce over the next 3 or 4 years. And as I said, if we see any kind of bull market run in the next 3 or 4 years in gold with this, given how close it is to its floor price calculation, yeah, we could very well see gold rise up by about, to over $3,000 an ounce, $3,500 an ounce. And that's something that you need to keep in mind. I know I've been receiving questions as to where should we place our money, or how should we preserve our wealth? What should we invest in? And I by no means am a certified financial advisor. I am sure that there are tricks and plays that investors can do to preserve their wealth, but a very basic thing that you can do is, and especially would be very prudent to do at this time, is hoard precious metals. Hoard the actual hard physical currency. Buy it now while it's dirt cheap, okay? You should be, technically speaking, don't buy what other people are buying. Buy what no one else is buying that's actually valuable. And right now, gold is extremely valuable, and it is undervalued by the market, but I have a reason to believe that it won't be undervalued for long. Probably in 2022 sometime, we're going to see that uptick in gold. Doesn't mean that we're going to net 50% returns in 1 year by any means, but we could be seeing double-digit returns in gold for the next 3 or 4 years. And then, hey, 10% returns on gold is going to be outpacing the markets by far, including the stock market. And guys, that's what I have for this video right now. It's just a short recap on this about gold and the importance of it, especially in these high inflationary times. Gold has not lost its status as the safe haven precious metal of choice. It will always remain that way. So right now, the fact that it's not going up in price is just a great opportunity to buy some now. I'm certainly going to be acquiring some in the next few weeks. So I will never recommend for you to buy something that I won't buy. I'll have a couple of other videos that will come out sooner or later on things to look for. Probably the next one I create in this channel, probably on some stocks to look for to actually buy. And as far as that is, that's just talking about their common stock. But yeah, I'll have some companies that I think are going to be valuable and are probably relatively undervalued compared to the market right now. But the stock market is just incredibly frothy, and profitable opportunities are going to be diminishing in the next coming years. So, but guys, stay tuned for that. If you like this video, if you like the content I provide, make sure you just click that like button, drop me a comment, let me know about what you think about all of this. I'm curious to see and learn from you as you are from me. And, subscribe to my channel if you haven't already. Click that notification bell, share my videos wherever you may. You may share them on social media as you see fit. And until next time, I'll talk to you guys next time.